So I think it starts with Bitcoin solving the thing that I brought up earlier about the mismatch between transactions and settlement speeds. So from literally the invention of the telegraph until just before the invention of Bitcoin, we didn't have fast settlements. We had fast transactions, but we didn't have fast settlements. So we had an inherent, really big mismatch. And what Bitcoin kind of is the invention of fast settlement, fast digital settlement. It's a way to send value to someone that is now permanent, final settled value, unless, of course, the majority of the network of many different entities decides to reverse it, which is not really a thing that happened. I think that it's cool that option exists for people that wanted to. I don't really see it taking off. And I've touched on that kind of system before. One is that it's involved in a chain of credit. And credit isn't necessarily always a bad thing. Sometimes credit gives you efficiency. But the problem with that system is you have to rely on credit. So with Bitcoin, you have the option. You could use it non-custodially. You could use it custodially, depending on what your preference is for efficiency. Maybe for working capital, I don't mind having a little bit of custodial. Whereas like for savings, I want it non-custodial. People can pick whatever they want. With gold, there's no choice. You have to go through this like layered chain of custody with that whole process. Secondarily, gold, the supply inflates by about 1.5% per year on average due to new mining. So you're choosing to hold the money that has less debasement than fiat, but more debasement than Bitcoin over the long run. And it generally kind of goes against Gresham's law, which is people, if fiat currency exists, there's not a big incentive for people to say, I want to hold gold and spend gold. They'll say, well, I'll hold savings assets, whether it's gold, whether it's Bitcoin, and I'll just spend the fiat. That can be someone else's problem. Like I'll just spend fiat for things, and that circulates with higher velocity. I just don't think there's a lot of people for which that solution is solving a problem for them. And instead, there's just a fairly small number of people that are more ideological about it. They want to hold gold, and therefore they want to be able to spend their gold, which is great that solution exists for them.
Yes.
And people often say, well, why can't you make a gold-backed crypto? And the answer is there are. There's gold-backed stablecoin things, and there's a market for it. It's not a very big one, and it's just not solving a lot of problems that people have. And one of the things I like to point out, again, I go back and forth between the United States and Egypt. Regardless of where I am in the world, there are ways to access my Bitcoin. Like there's, you can have all sorts of multi-sig, collaborative custody, globally dispersed keys and things like that. And with gold, when I'm in Egypt, I can't access any gold I might have in the U.S. When I'm in the U.S., I can't access any gold I might have in Egypt, other than through trusted third parties. If I hold my gold in a vault in Singapore, and that's great, but it's this chain of custody, and so it's not that it's not a solution. It's just that it's clearly a limited solution. It doesn't kind of fundamentally solve the problem. It just kind of band-aids the problem. And to be clear, I mean, I like gold. I've owned gold for quite a long time. I certainly prefer it over government bonds. Between the two, so I don't consider myself an antagonist for gold bugs. It's just that I view Bitcoin as doing a lot of things that gold proponents wished that gold could do. So I think 10, 20 years, I think it increasingly becomes global capital. I think that right now, the network size is like under $2 trillion. I think that first we got to get as big as gold, which now with the price increase is estimated to be something like 20 trillion. Or 15 trillion, something in that ballpark. So I would say first we have to add another zero to market size, because one of the ways I describe it is that Bitcoin is money, but it's not a super densely saleable money in any one area. So if I take the dollar, let's actually take a simple example. If I take the Egyptian pound, it is very saleable in Egypt. With Egyptian pounds, I can buy almost anything from any merchant. As soon as I go outside of Egypt, that is terrible money. And it's because it's got this monopoly in Egypt and this cultural acceptance of it. But then it's almost useless anywhere else. And most currencies are like that. A couple top currencies, like the dollar and the euro, they are very saleable in their own jurisdiction, And then there's still a number of ways to transfer, exchange it outside of the jurisdiction, but there's more friction there. Bitcoin is interesting because in most urban centers in the world, you can find some people that would accept Bitcoin. Or at the very least, if you have Bitcoin with you, you could find someone to transfer it for the local currency and then spend it fairly easily. Certainly easier than I could get Egyptian pounds off my hands here in the United States and quickly just go buy something with dollars. And so it is gradually monetizing, but doesn't have a very dense base. But I think that over time, as it gets larger and larger and larger, that starts to become more relevant. The other big thing is that governments try to hold it back with capital gains taxes, so that every single transaction you do is you have to record it and pay taxes on it. And there's some, El Salvador has eliminated that. Over time, you could see more countries start to get pressured by their people to eliminate that and elect politicians that eliminate that and just make it a money. So I think when we're talking 10, 20 years, I think we're talking more like becoming a really big global asset with some monetary characteristics. But then eventually in the longer arc of time, it has good attributes for money, in my opinion, and will increasingly pressure fiat currencies. I think digital money with zero debasement is a pretty powerful long-term concept. And Bitcoin does gradually update over time. So, the Ethernet that we use now is not the Ethernet that was invented 50 years ago, but it updates in these backward compatible ways. And so I think that, it'll update over time. Maybe no line of code Bitcoin 100 years from now is the same line of code that it is now. But I think the concept and the chain of continuity of network effects has a very good chance of persisting for the foreseeable future. And it's very powerful long-term money that it's hard to imagine that getting displaced. Now we can imagine risks like quantum computing, and then does it have to do a hard fork to become quantum hard? And the UTXO set transfers over. I mean, I can imagine different scenarios for what it looks like in the far enough future. But I think for any sort of investable time horizon, that this is a structural upgrade. So most fintech upgrades over the past century and a half were about adding new layers on top of the existing system. So increasing centralization, increasing efficiency, but not really changing the root of it. Bitcoin is the first kind of creation in like a century and a half where, again, we have fast settlement now. That's actually a really big invention. And that has very long-term implications. That is not just a minor, it's not just a one new thing that exists now. That's a pretty foundational thing that I think as it builds a network effect over the long term, does fundamentally change how we think money is.